Hello, Realtor friends. This is Jerry with Lendy Home bringing you the sexy program of the week. And this week, we bring you the DSCR, a type of loan that I call ninjas. Well, no income, no job, no problem. And it's not a program for your typical first-time home buyer. This program is designed to assist real estate investors that don't have documentation, supporting documentation to prove the income. Now, before we dive into what the DSCR program is, let me give you the definition of DSCR. DSCR, it's a formula. It means debt service coverage ratio, and it's a formula used to evaluate the performance of investments such as rentals, right? That's what we do. Commercial, condotels, etc. Sky is the limit. So now, what is the formula? Here is the formula. So when you evaluate rental property, and let's just say that you found a deal either for you or your clients, right? So you need to know the estimated gross rental, right? You know how to do that. You pull it from the MLS, and then you reach out to your lender, hopefully it's us, and you ask for the PITI, the payment. So you're going to be dividing the estimated gross rental by the payment, and that's going to give you a number. We call that number a DSCR ratio. Now, when it comes to lending, when you have a 1-to-1 ratio, that's good. Okay, it's going to be great. Like, for example, or anything higher than a 1, it's going to be good. Okay, as an example, you found a cash cow, right? Out in the boonies, maybe. But the PITI is going to be 2,000 and the estimated rent is going to be 2,200. So you divide that and it's going to give you a 1.1. So in this example, right, in this example, this is, in the eyes of the lender, a good investment because the DSCR ratio is higher than 1%. Now, can we help investors when the investment yields a lower than a 1-to-1 DSCR ratio? The answer is yes. Now, what is the catch, right? The catch is that your buyer would have to bring in a little bit more of money to the down in the form of a down payment. Okay, let me give you an example of one of our DSCR programs. We work with more than 128 banks. Okay, so we can tap into a lot of sexy programs. This is one of the programs. So, as an example, we have a program that goes up to 80% LTV on purchases. So that's 20% down, right? For investors. If they want to get the money out of the property cash out, we can go up to 75% LTV on cash out refinances. And look, this is beautiful right here. No pay stubs, no tax returns, no W-2s, no 4506C, nothing. Because remember, we are evaluating the asset, not the investor itself, although the investor has to have decent credit. Okay, so now this program is designed for no experienced investors. Okay, so now no experienced investors, 80% LTV. Now we have another program that for experienced investors, meaning they're already managing one rental, or sometimes the lenders will see experience as, oh, they already own a single family residence, owner occupied. Now they're buying an investment. They see him as experienced. But typically, experienced investor means they already manage one property. Okay, so now for those experienced investors, we have one that we go up to 85% LTV. Now, typically on a DSCR program, borrowers need 6-month reserve. That is normal. Okay, now with this specific program, they only need 3 months reserve when the loan amount it's less than 1.5 million. And look, 660 FICO, okay, which is amazing because again, they're evaluating the credit of the investor, not too much the income, right? And normally what a lender looks, it's a 700 FICO or above, but not in this case. Again, we qualify the cash flow on the property, not the investor's income. So if you have any more questions, I mean, I know this is a lot of info, right, to digest. If you have any questions, feel free to reach out via telephone. You can call us, send us a text. And if you're a team leader or broker, We can even go to your office and present you all of the arsenal of sexy programs that we have available so that your realtors can close more deals, because that's what you want, right? All right, guys. Nice talking to you, and I'll see you next week.
I'm too sexy for my love, too sexy for my love, love's going to leave me.